Hey guys, welcome back to Stacking Stocks as we share with you the latest information about NIO stock. Well, we know it's been a while since we talked about NIO, and it's about time. Currently, NIO is one of the top-selling EV manufacturers in China. It sells a number of car models, including a coupe sports car and 3 SUV models. Since last September, NIO has been selling its ES8 model in Norway as well. The company plans to expand into 5 more countries in Europe in 2022 and more than 25 countries worldwide by 2025. Now, NIO shares dipped as low as $20 in the last month, though we've seen a strong recovery since. The primary expectation is that the bottom is in, and we could see NIO go much higher from here. The growth story remains intact, and NIO will also be helped by macroeconomic factors and regulations, though there are mixed signals. So what's next for NIO stock? Stay tuned as we figure it out. For starters, NIO has been growing revenues at triple digits for the last year, and while growth will have to slow down at some point, NIO has 3 key growth catalysts coming into play in the next few months, which we believe will propel the stock up to its rightful place. Okay, so NIO has already started delivering its cars to Norway, and this will soon be followed by Denmark, Sweden, and Germany. These are some of the biggest markets for EVs in Europe, and NIO is cementing a position early on in the game. What better way to dominate the EV industry than to occupy all the top EV markets? Well, as much as it'll take years for anyone to surpass Tesla, any market expansion guarantees investors an increase in the stock share price. NIO's valuation looks very attractive. The stock trades at under 5x projected 2022 revenues, well below the likes of Tesla, which trades at around 15x projected revenue, and XPeng, which trades at almost 7x. NIO is likely to grow revenues by a strong 75% per consensus estimates, a bit below XPeng but well ahead of Tesla, meaning that the lower multiple isn't really warranted. The longer-term outlook is also looking good. NIO is expected to expand its model lineup this year with the launch of the ET7 full-size sedan, followed by the ET5 compact sedan, and there's possibility that we could see more new vehicles unveiled this year. Now, NIO's efforts internationally will also be matched by its domestic ones. The company is set to unveil the ET5 in China in the fall, and we have strong evidence that it'll be a resounding success. The CEO of NIO, William Li, announced that they had received the highest level of pre-orders in the company's history with this new model. And on top of that, we have the ET7, which will soon be selling in China and soon after Germany. That might just be what the market's been waiting for. We could see NIO stock skyrocketing once the ET5 model is unveiled. So NIO has both product expansion and geographical expansion going for it, and to accommodate this, it also has ambitious plans to expand its production capabilities. It's well known that NIO does not yet have its factories, but it does have an arrangement with JAC Motors, which was renewed back in May 2021 and accounted for a doubling of production. And finally, we should also see some progress made in the rollout of the NIO Park, which is expected to have a production value of 500 billion yuan. Wow, this is crazy. Naturally, a lot of folks are concerned at the moment with macro factors, most notably the impending rate hikes. However, what many fail to take into account is that while the U.S. is tightening, the PBOC is putting out clear signals of monetary easing. This is one of the largest central banks in the world, and you better believe it will have worldwide consequences. So on the one hand, we have what could be an impending recession in China, but also a central bank that is ready to jump into action when the time comes. This could be great news for Chinese equities. On another note, this year will also see significant reductions in the EV subsidies. However, given the fact that NIO sells higher-end cars, it might not be as affected as its competitors. NIO is also expected to double production capacity at its plant in Hefei, China, to 240,000 vehicles a year by mid-2022, and this could also help volume growth in the longer term. NIO's margins are also likely to pick up further with economies of scale improving. Well, at the moment, we're looking at a lot of positive indicators for NIO stock. Now, what does the NIO stock risk outlook look like? Should investors be worried about anything? Well, EV stocks in general were hit by the stalling of negotiations relating to the Build Back Better Act, which had legislation that included purchase tax credits. Separately, the stock has also been weighed down for some time now by broader selling pressure in Chinese American depository receipts after ride-hailing firm DD Chuxing said that it would delist from New York Stock Exchange less than 6 months after going public, amid regulatory pressures. The biggest risk with NIO is execution. The company has faced problems with supply before and not all due to exogenous factors. With the launch of two new models and the expansion into Europe, NIO certainly has its hands full. On top of that, there's not much we can do but speculate in terms of the success NIO will have in Europe. Investors like the technology, the design, and the branding behind NIO's cars and believe this will set them up for success. However, we must bear in mind that NIO has to compete domestically with other EV startups and in Europe with legacy car manufacturers who are quickly piling into the EV space. Now, despite the near-term bearish outlook, the long-term demand for EVs globally remains robust as countries expand their electrification program to meet net zero emission targets. EV demand forecasts widely anticipate rising sales and market share between 2022 and 2030. The International Energy Agency's forecast suggests that the global EV stock will reach 145 million units by 2030, accounting for 7% of the global vehicle fleet. According to the China Association of Automobile Manufacturers, new energy vehicle sales, including hybrid plug-in and battery electric vehicles, are expected to rise to 5 million units in 2022, up 47% from 2021. The market share of NEVs is forecast to grow in China, with NEVs accounting for 18% of total vehicle sales in 2022, up 5 percentage points compared to 13% in 2021. Additionally, Chinese brands' passenger vehicle sales are increasing in China partly because of government subsidies. As a result, the market share of Chinese brand vehicles will grow significantly this year to a historic high. Well, growth drivers for NIO include new and upcoming EVs. Meanwhile, battery services are key to its business model. NIO offers an innovative subscription plan for batteries. Basically, the car and the battery are sold separately. Users can buy NIO EVs without batteries for a lower price and rent batteries for a monthly fee. They also can swap car batteries based on their needs. In December 2021, NIO installed its 700th battery swapping station in China and achieved 5.3 million battery swaps, up from 2.9 million in July 2021. It has also taken battery swaps to Norway, further challenging Tesla in one of its top global markets. If the EV maker can keep up its relentless hard work, then we could see a significant rise in the coming months. In a nutshell, NIO has a solid product line and offers tangible growth strategies. However, NIO shares could continue to come under pressure in 2022, in part due to tougher competition, higher operational costs, and regulatory risks. Given the upcoming tightening moves by the Federal Reserve, investors are also taking money off the table. Therefore, NIO stock could easily continue to slip further below $30. But then investors need to be more optimistic about the stock. It's not like any investment completely lacks risks. NIO is a strong buy on both fundamentals and technical analysis. If NIO can execute and deliver on its promises, it'll set itself up for long-term global success. Well, that's it for today. Thank you so much for tuning in. Remember to like, share, and subscribe. Stay safe, and we'll see you next time right here on Stacking Stocks.